Hi, everyone. This is Jason Bierk of Wall Street for Main Street. Welcome back to another Wall Street for Main Street podcast interview. Today's special guest is a first-time guest. I've actually been following his work on Seeking Alpha for many years. He's been a cornerstone of the libertarian community, promoting Austrian School of Economics, writing very interesting articles over on Seeking Alpha for a long time. His blog and now his podcast and his newsletter, Gold, Goats, and Guns. He's a former research chemist, and he also ran for Congress in Florida. Really interesting bio. Tom Luongo, thank you for joining me.
Hey, thank you, Jason. Good to see you. Good to talk to you.
Yeah, we're just doing audio here. Honestly, I can't edit video.
No, it's no problem. So yeah, no, I know. I just so you know, I tend to filibuster, so I turn the camera on so you can tell when I'm about ready to wind down. So
no problem. It's a Friday night. We're recording this interview on Friday the 13th, 2023. As usual, lots of craziness going on because DC is totally out of control with the spending. The dollar index is at 106.67. It's rallied a lot the last couple of weeks. The yields on the 10-year U.S. Treasury bond have gone down a little bit, down to a little above 4.6%. They were up to 4.7% yesterday. I want to get your thoughts, though, on Federal Reserve Bank policy with the rate hikes, the rapid pace of the rate hikes. What do you think are the goals of Jerome Powell and the Fed if they continue to either raise rates or keep them higher for longer?
Well, and to start out with, I think that we're close to the end of the rate hike cycle, but I'm not completely convinced of that either. I think that Powell will raise rates until he finally breaks Europe. The goal, I figured this out about 2 years ago when Powell first started doing stealth tightening in June 2021, and he raised the reverse repo payout rate 5 basis points above the Fed funds rate. Is when the bull market in the euro exploded, and here I am. Kind of a standard Ron Paul style libertarian and the Fed. I can't stand central banking kind of guy. But that Sunday, I said to my patrons on my biweekly market report, I said, Powell has to step in here and defend the dollar at some point. He just has to do so. And I never in my wildest dreams would he have tipped his hand as hard as he did when he did. But doing that didn't look like a big deal, but it was a big deal because when you have the euro throw a massive weekly, monthly, and quarterly reversal in the beginning of June by throwing off 3 cents from $1.22 to $1.19 in basically a day, like the Federal Reserve comes out at the numbers come out, or the statement comes out at 3 o'clock or 2:30. And by Friday's close, so two trading days, the euro is off 3 cents. And I'm like, okay, what's going on here? This is not normal. And the reverse repo facility immediately starts gaining massive amounts of liquidity. And I'm like, this is odd. This something's not right here. And then I started really looking at the situation as I understand it, and understand that I have a very nuanced view of how the cartel of bad guys works, which is to say that at some point when the cartel is in trouble, right, and that as standard kind of libertarian political thinking is that eventually when you run out of other people's money and you run out of the trade runs into it's the word I'm looking for, terminal moment, the cartel breaks, and all of a sudden everybody who was on the same team starts to go, you know what? No, this isn't working for me anymore. And I really started to think about everything that had been thrown out by the World Economic Forum and the way the EU was acting and the way Christine Lagarde was calling for global monetary policy to be coordinated to fight climate change. And Powell stood up at 2 weeks later at the Green Sea Summit, or 2 weeks earlier at the Green Sea Summit, and said, no, I have a dual mandate for stable prices and full employment, neither of which, of course, he can produce on. But that's what he stood there and he told Lagarde flat out, no, I'm not doing that. I'm not destroying the United States for climate change. And that was completely counter to everything, the path that we were on at that moment in time. And I said, okay, well, let's see. Is Powell trying to start the process of unwinding 13 years worth of ruinous monetary policy with QE and zero bound rates and everything else? And then I sat down and I really started thinking about SOFR, LIBOR, what that switch means, and I'm like, there's something serious here. So I started theorizing about this stuff, and I said, well, I don't believe my own bullshit here, frankly, but I'm going to put together a hypothesis that maybe, just maybe, we're going to see a sovereigntist pushback coming from Wall Street and the Federal Reserve saying, okay, as bad as we are, those people in Europe are worse. And what they have planned for us is 10 times worse than what we're going to do, what we would do to the American people and to the rest of the world. And you can look at it that way. And you can also look at it as, if those people win this global war for control of the monetary system, there's no need for commercial banks anymore. And if there's no need for commercial banks anymore, then there's really no need for the Fed. Because ultimately, at the end of the day, you start with one central bank digital currency in every country, and then eventually you wind up with the IMF running a show with a digital SDR, and we don't need individual central banks any more than we need individual commercial banks. Everybody, the two channel monetary system dies, and it collapses into one. And I'm just saying to myself, I don't see J.P. Morgan, Goldman Sachs, Citigroup, Wells. I don't see them going along with this. I see some of them like BOFA, for example, I think is fully in the tank. So was Bank of New York Mellon for the whole, and BlackRock. But I don't see it I didn't see it at that moment in time. And I just kept watching the political wins in DC. I started watching geopolitics, and I started watching how Powell was acting. And I'm like, yeah, no, this is something different here. And then, let's see what he's going to do. And then the minute he gets reconfirmed in February 2022, he starts raising rates. And then he started raising rates hard. And realized that after 13 years of the zero bound, Jason, the offshore dollar markets had so thoroughly engulfed the domestic dollar markets that they ruled monetary policy, that the Fed, even if the Fed ever wanted to defend itself in the past, never could, because if they start pulling back on liquidity overseas too hard, then the banks in London, the banks in Frankfurt, the Hong Kong banks, they all start to really hemorrhage. And since we were all tied to LIBOR, if LIBOR blew out, that meant that that we had to deal with it here in the United States, even if we could absorb the retraction in credit, that the Fed was inducing. And so, as Jeff Snyder pointed out for years, and I used to read Jeff when he was at Alhambra Partners, and he taught me a lot about this stuff. And I'm like, he said, the Fed's not in control of their own monetary policy. The Eurodollar markets are. And I listened to that very carefully, and I went, dude, okay, but what happens when the Fed decouples from the Eurodollar markets? What happens when the Fed wants to raise interest rates and wants to regain control over their own monetary policy, even if it's for their own nefarious desires, right? Well, it would look like this. And they would first separate the debt indexing rate from the U.S. from the LIBOR debt indexing rate to a domestic one. And then they would raise rates hard. And that would then start forcing a fiscal fight on Capitol Hill. And that's kind of where we are 2 years from now. And that's the short answer. I've done so many interviews on this, and I've done so many hours of explaining this idea that I'm trying to do the short version here. So where we are at this point in the cycle is, the Fed's already done a lot of damage, and they're shrinking their balance sheet at roughly $95 billion a month. And they're going to continue until they break something. And I think the thing they're trying to break is Europe. I think they're trying to break the European Central Bank. I think they're trying to break the EU. I think they're trying to break the World Economic Forum. And they have the tools to do so, because they are the biggest Ponzi scheme in the world. And when you're the biggest Ponzi scheme in the world, you can roll the other ones up. And that's exactly what they're beginning to do.
I've listened to a lot of Jeff Snyder, the Eurodollar University, and a lot of his stuff. I mean, on the Eurodollar market, he is an expert. On a lot of his other market calls, like oil market, gold market, that the Eurodollar futures determine this. I completely and totally disagree. I know a lot of hedge fund managers that don't take any of his analysis on that seriously. Oil hedge fund managers. I agree, though, that the United States of Europe, which is what the academics and the Davos crowd came up with for the European Union, was a totally bad idea. It was a bad idea from the start. Hasn't Jeff Snyder also said that the European Union, that the euro dollar actually collapsed in 2007? Though, didn't he say? Hasn't he said publicly?
I don't think he said that at all. I mean, he was when I was reading him in the Law Partners in 2020, saying it was all about Eurodollar. He called it Eurodollar 4. I used to read Jeff very, very carefully, and of course, there was so much inside baseball I could never really understand everything he was talking about. And then when he came out and he said that the Eurodollar system is a free market. Correct me if I'm. This is insane to hear this. This is when I said to no more to Jeff Snyder. And he said that the Eurodollar system was a free market reaction against the central planning of the Federal Reserve. And I went, really? You really believe that the Federal Reserve acts as the only centralized? Well, he's wrong. That's horse shit. The idea that that this wasn't that all of this didn't exist in a planned environment post Bretton Woods is just nuts.
Well, I think the Eurodollar was created out of greed. So it was created by European banks initially, and then the American banks copied it. They started setting up these offshore dollar lending facilities, right? So it was out of greed. And okay, if you want to call it free market, we can call it free market. But then what you start adding I was going
to say that I can't call it free market at all. It's clearly an outgrowth of central planning. And it's not a free market. It's a corporatist market. It's a captured market. And so it was the plan. It was the goal of the post-Bretton Woods environment to send the dollar around the world, lever it up, get it involved in every nook and corner, and take of the global financial system, make it the reserve standard of the world, make it the trade settlement currency of the world. But notice who gets to keep control over the price of dollars. It wasn't the United States. It wasn't the Federal Reserve. It was the City of London through LIBOR. Okay, and this is a subtle point that no one wants to talk about. And when I heard Snyder making that argument, I'm like, what the do you work for these people? Like at that point, I absolutely just questioned everything I'd ever thought I knew about what the system, about where we were. Because again, you used the phrase the Davos crowd earlier. You know where that came from? That came from me. Like everybody has that meme in their head now because I put it there 6 years ago. And what we're seeing is a functional split amongst these freaking Eurotrash commies and the American corporatists. There are no good guys in this fight. They're all bad, but there's some guys are worse. There's some bad guys are worse than others, and that's just the way I look at it. And I'm willing to make that case. And then for the short period of time, if the Federal Reserve has to do exactly what they should do. And I actually then sat down and I said, if Powell's actually serious about this, if I were Federal Reserve Chair and I actually wanted to regain control of the markets that I'm supposed to be in control of, and to save the commercial banking system in the United States, and I was going to do it for altruistic reasons, the policy would look no different than what we've seen for the last 2 years.
Well,
as an Austrian, this is exactly what I would have done.
Well, Tom, the problem with the entire system, with the leverage casino, the derivatives bets, the fractional reserve banking, treasury bonds as collateral, when you start raising rates this rapidly, you start making the collateral go bad. A lot of these derivatives are tied to the dollar and interest rates, so you start making those go bad. I mean, basically, he's blown up the regional banks, so he's going to force consolidation into a smaller amount of banks that are too big to fail and larger. And then from what I'm hearing from business contacts, it sounds like banks outside the United States, so Canada, Australia, Japan, China, emerging markets, those banks are in deep, deep trouble, especially the European Community banks.
Yes, they are, and I'm not going to argue with you. I agree with Brent Johnson that in a version of dollar milkshake theory, but Brent and I came across this, came to our conclusions about this from different perspectives. Brent just said, look, the dollar is too intertwined in the world to ignore at this point. So if you tighten up dollar liquidity, then this is what's going to happen. Okay. And I said, yeah. And what if the Fed's doing it on purpose? And what if the Fed really does believe that the American banking system is stronger than everybody else's? Look, Jason, I'm not going to lie to you. The system is screwed. I mean, it's screwed in a way that is deeply. It's
immoral. It's corrupt,
and I get that.
It siphons off wealth.
Of course, it is. It's all those things. But at the same time, it's also not. It's also you got to expect everybody who's involved in it to try and keep it going for as long as possible. Okay. So then the question is, if it's screwed, what do you replace it with? You either go through a 1970s style stagflation post COVID, a la Arthur Burns and Paul Volcker, or you blow the whole system up and replace it with an even worse system than the one we have now. Look, the simple truth is that there are ways out of the situation that we're in. But the banks you telling me that overseas banks are in more trouble than American banks, I'm like, yeah, no lie. 2 years ago, I'm like, yeah, that's exactly what's going to happen. And then the question is it being done on purpose? And if it's being done on purpose, ask the question why it's being done on purpose, and then look at what actually happened on Capitol Hill. Nancy Pelosi 2 years ago tried to push the infrastructure bill, Build Back Better, and lied about how much Build Back Better would cost, and the debt ceiling into one vote, and she couldn't get it past. Two senators, Kirsten Sinema on the Democrats, who's now an independent, and Joe Manchin as the Republicans. I got news for you. I know how DC works, just like everybody else does. When somebody stands up against that kind of power, if the powers that be actually wanted it, they would have had their legs broken, they would have been thrown down the stairs, or their children kidnapped. That's the way it works. But no, somehow Sinema and Manchin stand up to Pelosi and the whole Biden administration and the rhinos and the GOP and everything else, and scuttle the whole thing, so that we get a watered down, tepid version of it 6 months later, while the Fed goes through a insider trading scandal that was set up by Lael Brainerd herself, who's the one who signed off on the freaking trades and then leaked them to Politico or Axios, whoever it was that broke the story, in order to try and get rid of Powell and all the hawks on the Federal Reserve Board. Like, this happened in real time. And I'm like, oh my God, this is no different than Dominique Strauss-Kahn getting nuts and sluts out of the IMF 15 years ago. It's the same story. These people were trying to ensure that they left the Fed with no other option than to monetize another $7 trillion worth of ridiculous spending that nobody needed. It was literal political blackmail. And Manchin and Sinema stood up against it and said no. And my spidey sense said the only way they stand up that hard against that is if Wall Street said, nope, don't let this go through. We have your back. Like, that's it. And I ran that story for 6 months, and I was like, and then it played out exactly the way I would expect. And then Powell was able to get reconfirmed because Brainerd couldn't get more than 30 votes on the Senate floor, and Powell was reconfirmed with 80. And then he raised rates, which is exactly what he should have done. But he still tightened 6 months before that.
But you don't think that the system is going to collapse from rates being kept at these levels, though, soon? Because I think the European banking system is on the verge of breaking if it has not already broken. I would actually argue that the entire European banking system in the European Union basically collapsed in 2008. And they've been secretly getting like currency swap line bailouts that the Fed has been giving them and then waiving the loans every couple of years since, with Greece and pigs and Brexit. I mean, there's a lot of evidence that the banks did have trades blow up and they did need currency swap line bailouts.
Right. And what I'm arguing very simply, and I'm going to be honest with you, what I'm arguing is that the Bernanke-Yellen Fed were doing that in order to keep the euro and the European Union alive, because they work for Davos. They were globalists, and and Powell's not cut from that cloth. Now, Powell's first term was a mess. I could make the argument that COVID was as much directed at Powell to get him back to 0% and to force him to do terrible things to bail out his friends in private equity, as it was to try and get rid of Donald Trump to ensure that Joe Biden is made president. Like this, I can make that argument, and I have made that argument, because if you look at what they use Trump's own idiocy against him, because he's just a property developer from Queens who believes that, hey, if we do good loans and good debt, it'll all grow Trump is out there still complaining about Powell. He wants Powell to go back to the zero bound. What is he, out of his mind? At the zero bound, there is no Federal Reserve. I agree with Daniel DiMartino Booth on this. Like, you don't have a central bank when you're at the zero bound. So Yellen and Bernanke kept this thing going for as long as they could. Yellen waited a year to start raising rates, and she only did so tepidly right before she left office. Powell came in, tried to raise rates hard, but because we were not fully off SOFR at that point, because SOFR was still in its early pilot stages. It was being rolled out over the course of 5 years. It started in 2017, and then it went into effect for all new debt in the United States. Went into effect on January 1st, 2022. The Eurodollar futures system is now dead. It's the COMEX contract died over the summer. It's been replaced by the SOFR futures contract, the 3-month SOFR futures contract. And, and I remember, people were asking Jeff Snyder in 2020, early 2022 or mid 2022, well, what about Tom's arguments about SOFR versus LIBOR? He said, SOFR doesn't matter. There's no volume there. 6 months later, all the volume that used to be in the Eurodollar futures market was now in the SOFR futures market. And so when Powell tried to raise rates in 2018 and raised one time too many in December of 2018, which would have broken the ECB, he had to pivot along with Mario Draghi at the January meeting because LIBOR blew out, and that then set us on the path to the repo crisis in September 2019 because, as Martin Armstrong has pointed out, JP Morgan refused to repo at par any European sovereign debt. They just said, no, we're not taking it. And again, JP Morgan's at the head of this thing. And that's what started the process. And since then, US banks will not repo European sovereign debt at par, which is why Powell, after he raised the reverse repo payout rate at the June meeting in 2021, he then opened up a foreign repo facility in July of 2021 to keep the skids greased. But then also, as he starts raising rates, guess who has to go and get that money at 5.5% to bail out their markets? Christine Lagarde. And during for example, during the bank failures of March of this year, I had people yelling at me saying, "You're full of shit. You don't know what you're talking about." The ECB just went and the Fed just gave the ECB a big swap line. I said, yeah, and they did so 5%. You think the ECB is happy about that? You know what the ECB did just then? They did the walk of shame up to the discount window, the Fed's discount window, in order to stay afloat. That's what happened. Just like all the other banks were trying to avoid doing the walk of shame to the discount window, the ECB actually did it. And then you people are telling me that this wasn't what it was. Like, it's exactly what it was. Like, it's clear. I don't think Lagarde and Powell have spoken in over a year. If you go watch the footage from the Green Sea Summit where he told her no about climate change, she shot him a look that, one, she was not expecting it, and two, she shot him daggers, dude. Like, it was chilling. I would never want Christine Lagarde to look at me that way. I never want any lawyer to look at me that way. So, like, I would like for this story, I would like to be wrong about the story. I said this forever and a day because I've had to burn my libertarian street cred card with so many people, but I'm sorry. It's happening exactly as I literally laid out in a thought experiment in July of 2022 on a series of podcasts I did.
Well, we don't have free markets for the most part. So
of course
there's
there's
very little free market. So libertarians, like, I get this all the time from people like, you're a libertarian, it's free market. YouTube's a free market. It's like, no, it's not. There's censorship. There's tons of manipulation and censorship everywhere.
Agreed. Absolutely. And look, I make the point, I make the point all the time. And when I was a nobody doing my early live streams and, trying to build a reputation for myself, I would sit down and I would tell people all the time. We sit down and I'd have 50 people on a live stream. And I'm like, look, I'm not analyzing the world I want. I'm analyzing the world I've got. And it's similar to the talking point that Daniel Booth puts forth. And she says, look, we live in modern markets. We're not going to do away. We're not going to not have a central bank. I'm like, well, I don't fundamentally agree that we need central banks, but we live in a world where we're oriented around the central bank model, at least for now. So let's think about this for a minute and say, okay, well, we can't get away from the central bank model right now, but we can certainly defang them, and we can certainly watch our central bank and have the head of our central bank say, okay, you know what? The way we did things under Bernanke, Yellen, and even to the later Greenspan years was completely wrong. And we need to arrest and go back. And what Martin Armstrong's been arguing for a long time is like, look, the Fed would be, I don't necessarily agree with Martin about this, but I do agree with him, not in theory or not in principle, but in kind, effectively, which is to say, look, we have this monstrosity that is the Fed with a monolithic singular Fed funds rate, which it's not supposed to be, and everything else. But if we go back and think about what the Fed's original charter was, which was to set regional interest rates and provide emergency liquidity to the banking system on an as needed basis, temporary elastic money to get through any liquidity shortfalls. If we had them doing just that, if it went back to that model, the world would be 10 times better than it is today. The financial system would be 1/10 or 1/100th as corrupt. Okay.
But DC
And it
doesn't
would
want that
also
though.
force fiscal responsibility on Capitol Hill in a way that we haven't seen in our lifetimes.
I mean, the current system we have now with the size of the derivatives market and how big it is, that needs bailouts every 2 to 5 years since 2008. I think the derivatives market blew up in 2008 too, along with the European Union. So, I mean, the amount of bailouts with all these, the large banks to me, Tom, they're using fractional reserve banking. They're getting bailouts. I mean, they're basically hedge fund operators because they take the depositor funds and then they put on these hedge fund trades. They don't make a lot of their profits from normal banking anymore.
No, they don't, because they've been forced out of it because we went to the zero bound for 14 years. Okay, look, I'm not trying to make Wall Street into the good guy here. The system broke in 2008. There's no argument that the system broke in 2008. I would argue that the dollar reserve standard not just the European Union broke in 2008, but the dollar reserve standard as a thing died in 2008. We went through 3 years worth of intense negotiations about what we were going to replace it with. And what we replaced it with was the coordinated central bank era policy, right? Where we had round robin QE from the Fed, then the ECB would take a turn, then the BOJ, then the SNB, then the Bank of England, then the Bank of Canada, then the Bank of Australia, then the Fed, then this one. And they would just go around and around and around, levering up the world at the zero bound. That's what they did. And then to my argument, the Fed was the first one to say, you know what, that doesn't work for us anymore. We can't afford to do that anymore. That will destroy the dollar, not just as the global reserve currency. Again, something else Powell has said, and said so at a Humphrey Hawkins testimony, which is that he believes that there's room in the world for more than one reserve currency, which is a clear signal that Powell understands that the global reserve currency status of the dollar is a burden that we can no longer afford to carry. And, we can go to Triffin's paradox or anything else. It's like, that's the situation. And if Powell understands that, and he represents the big New York banks, because that's what the Federal Reserve really represents. So he's doing this with the blessing of the major money center banks. Okay. That's what's happening. We can look at them as cartoonish, snidely whiplash, mustache twirling, evil folks, or we can look at them as here's another way to look at them pre-election of Trump, pre-Brexit. Captured pawns on a table that they have no other option. I'm not making that argument that that's who they are. I'm saying it's another way to look at them in order to see how complicated their position could actually have been. And then if you look at SOFR was on the table and within the Federal Reserve, people were talking about they were writing papers about it for 10 years. They wanted to go to SOFR right after, there was a push within the Fed to go towards something like SOFR after LIBOR blew up in 2008 and took down our markets, right? And that was pushed off by Obama and Geithner and Yellen and Bernanke until Trump got elected and Wall Street saw its opportunity to get back into the game and for the Fed to get back into the game. But you're not going to turn around overnight. You can't put something like SOFR in place overnight. It would break far more than it would fix. Okay. So this is a system. This is a gradual turn of a maximally corrupt system that we all hate, including, I got news for you, most of Wall Street. Wall Street doesn't really want to do this, but they would rather go out and do traditional banking. But, when the situation is set up that this is where our markets are, this is where our best profits are, and that's where they're going to go. Okay. They're not moral people. They're just going to go where the best opportunities are. And under the old Eurodollar system, that opportunity, those opportunities, best opportunities were to send the dollars overseas build up everybody else, and just let the system run. But once you reach that breaking point, that again, this is like the Misesian crack up boom, whatever you want to call it. Once you reach that point where you can't lever the Ponzi scheme up anymore, well, then the most powerful Ponzi is going to reverse course, and you can't. You have to make your peace with that, even if you're angry about it. And rightly so, we should be angry about all the trillions in wealth that they've stolen from us over the past century. But it is what it is. But so it's an but if you read the tea leaves properly, that also becomes an opportunity.
They've also made the
to then be ahead of them and take an outsized share of the money back when the system has to reverse itself, and they have to give part of that money back, because they do. They're going to have to give part of that money back, and they're in the process of doing so right now.
It seems the system is just so fragile, especially it's gotten even more fragile in the last 15 years with total amount of debt, size of the derivatives, the amount of dollar denominated debt, that the system really can't handle too much inflation. It can't handle deflation for more than, I don't know, a couple quarters, 6 months, give or take, especially if asset prices fall and tax receipts collapse, because then that's one of the real reasons for quantitative easing. It's not for the reasons the Fed says publicly. It's to help, monetize the debt and make sure that the government gets funded. That's one of the main reasons.
Well, I agree, but I think that there's a fundamental fight between the Treasury Department and the Federal Reserve. This is also part of my argument, is that if you look at the way Powell and Yellen are acting, and they're clearly at odds with each other, like clearly at odds with each other. Every time Powell does X, Yellen does something to try and counter it. And right now, it's her announcing that she's effectively going to do yield curve control. 2 weeks ago, she came out and said, I'm going to intervene in the Treasury markets to make sure that they remain liquid. Well, what does that mean? Well, it's exactly what it means. It means that she's going to do yield curve control. She's been doing it for a year now. She's been selling more 2s than 10s in order to keep the 10-year yield suppressed, in order to try and keep the 2-10 spread as wide as possible, in order to signal to bond traders that a recession is coming and a recession is going to be awful and blah, 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 blah. But I'm sorry, back in June, I had Danielle Booth on my podcast. And in June, I said, look, I see a bear steepening. I didn't use these terms at the time because I didn't think of it in those terms. I just see a normalization of the long end of the yield curve, and coming, as the world starts to call into question all, everything that they've been fed, and Janet Yellen runs out of ammunition. And Danielle disagreed with me. She said, no, the 2-10 spread's negative 110 points. Like, what do you? I'm like, yeah. I said, it can't go to 150, right? Like, where's it going to go? I mean, markets always mean revert in that respect. Not completely, but they always tend back towards the mean. So here we are 4 months later, and the 2-10 spread is around 35 basis points. And that was after a massive run this week into U.S. Treasuries on a flight to quality after Hamas attacked Israel and a major geopolitical event hit the board. And I've left most of the geopolitics out of this conversation so far, because again, we'd be here for 4 hours if I explained it all the bits and pieces of it. There's so much happening, but just to keep it really tight, Wall Street and the Fed are defending themselves against people who are trying to destroy them. And they are the most powerful people in the dollar markets. So anybody trying to tell the Fed, oh no, you work for us. Well, that has always happened in the past. And that's why Jeff Snyder's work was invaluable up until the moment that Powell said, you know what? No more. And he started the self-tightening process in 2021 because he knew in 2020, 6 months later in 2022, all new debt written in the United States would be indexed to his interest rate, not to London's.
But doesn't
and
it
then
seem
the rest is history. And then we break a bunch of things because the markets are over levered, and an asset, we're going to have a contraction in credit asset based prices, and we're going to have commodity inflation. We're going to have classic stagflation.
Yeah,
that's what we're going to have.
Yeah, I call it stagflate tax slide. That was the best case scenario. I mean, I would argue though that we've had in the real inflation rate between 2% and 5% for over 20 years. So I mean, we've had a lot of inflation built up in the system for decades that most people haven't even noticed.
I agreed completely. No argument. I'm not going to try and sit here and be a Fed apologist. I'm just trying to argue what I do all the time. Because remember, I'm a strategic thinker first and then everything else second. Okay. So I like to play strategic board games. I like to think strategically. I like to outthink my opponents. And in order to do that, in order to sit at a 5-player table with 5 very, very competent people and try and figure out how to beat them, you have to start thinking about what they want and what they want to do. And you have to think about what their assets are and what their, and what, you have to do a SWOT analysis on all 4 of your opponents, right? Strengths, weaknesses, opportunities, threats to your opponents in real time, all the time. I've been training myself for this for 35 years, Jason, like no lie, at the gaming table. And I can tell you that when I do this analysis all the way down the line, and I just do a SWOT analysis on the Fed versus the SWOT analysis of the ECB or the DOJ or whomever, and then I start. This is the solution that presented itself to me, and it hit me like a ton of bricks, dude. I sat there and it left me stunned for like 2 days, and I finally, after a couple days of thinking about it, I finally posted up on my private Slack server for my patrons. And at the time, it was small. We only had like, I don't know, 1,000 people, 800 people at that point, and about 40 or 50 of them in the Slack server. But one of whom is a hedge fund manager who was literally attacked and destroyed by Wall Street. Okay, I'm not going to name names or anything because it's his private business. But I said, and I laid the idea out in like short form, and his response was, "Well, they don't call him Private Equity Powell for nothing." I'm like, huh. And then I really started thinking about it. And then I had another patron ping me out of the blue one day on Telegram and say, can we sit down and chat for a little while? And he happens to be a guy in banking and regional banking and whatnot. And we chatted about it. And he started bringing this idea of SOFR versus LIBOR into my head. Again, I don't take credit where credit is not due, where I didn't come up with it. Like I've riffed off of Martin Armstrong and Judy Shelton and all these people that I read on a regular basis in order to try and synthesize what I think is happening, right? And and he started talking about the changeover to SOFR and what that was going to mean. And I went, "Are you trying to tell me that we would no longer be beholden to a blowout in LIBOR anymore?" He's like, "Yeah, exactly." I'm like, "Oh my God, you're right." And then we started watching it, and so and at that point said, "Well, if that's the case," and this was before Powell started raising, then what would happen was once Powell started raising, he would start raising, and things wouldn't break like everybody was expecting. Like a lot of people were saying, "Well, if the Fed goes to 1%, they'll have to turn tail and like Puxatawny Phil and run back into their hole, and there'll be 6 more weeks of QE, right? Like 6 more weeks of winter." But if we're right about this, then Powell's going to raise rates and nothing's going to break, and everybody's going to be really freaking confused. And and things aren't going to really start to break until we get above 5%. And
okay. I've interviewed Ron Paul 4 or 5 times. He's actually seen the bank bailout documents because he got the Fed audit through both houses of Congress. Mm-hmm. I've interviewed his chief of staffs too about the bank bailouts. Yep. I think the Fed does a lot of shenanigans off balance sheet. So you said that if the Fed raises rates, things won't break. Well, what if the Fed is just moving, I don't know, trillions there? One of the DC Fed sources I spoke to, and this guy drinks and parties with people at the DC Federal Reserve Bank, he straight up told me the Fed's buying many trillions of Treasury bonds, other stuff, and sticking them off balance sheet. Maybe Janet Yellen and Jerome Powell are kind of reluctantly working together with these special purpose vehicles that Jim Bianco Research wrote about in early 2020. They can hide the stuff like Enron. Do you think that they can get away with this for a while, or do you think that this is going to end soon too?
I don't know. I mean, I haven't heard that. All I'm saying is I'm just calling it like I see it, right? And what I posited was what I've laid out. And I also posited that what would happen then, if that were the case, then we would see a political fork in the road at some point on Capitol Hill. And because then the spending would have to stop. Now, whether the Fed is bailing certain people out at certain points or whatever, I don't see it in the TIC report that there's been any that there's been a whole lot of central bank dumping of treasuries. So I have to wonder where all of these, these phantom treasury buying, where all this phantom treasury buying is happening. Because when I see, and I break the TIC report down by region, right? And I published this on my Twitter feed. I publish it in my newsletter. I publish it on my blog. And I've talked about this directly, that since Powell started tightening, do you know, if you break I broke the TIC report down into three basic regions: Europe and European satellites. So that would include offshore havens like the Caymans and Bermuda and stuff like that. Asia Pacific and the rest of the world. And do you know who the biggest buyer of treasury bonds over the last 2 years has been?
Isn't it the retail investor in the US?
No, it's Europe. I mean, it's from the central bank perspective, Europe. From the central bank perspective, the biggest buyer of treasury bonds has been Europe. Guess who the biggest seller is? No shock, it's Asia Pacific. Japan has dumped a whole bunch. China has dumped a whole bunch. But guess what? The Europeans, including the Bank of England, has now become the biggest buyer recently. Previously, it was the Caymans, and then it was Belgium, and everybody has bought a lot. But on balance, the biggest buyer, and it's over almost $500 billion in 2 years. So as Asia dumped, in order to maintain credit spreads, because Lagarde has been maniacal about maintaining credit spreads and not allowing rates to rise too far, too fast in Europe. And she literally held the German 10-year Bund below 5.5% or 2.5%, sorry, from October of last year to about 3 weeks ago. Like every time, go look at a weekly chart of the German 10-year Bund, you'll see exactly what I'm talking about. It goes up, it reaches 2.5, and then there would be a big event that would push it down. And I'm telling you, Yellen was helping at every turn. Yellen would be acting as Lagarde's wingman. Meanwhile, Powell was continuing to raise rates and trying to force rates higher. And then she puts together the transmission protection instrument in July of 2022 after the third 75 basis point rate hike, where she bitterly complained about Powell doing so. But she said, I'm going to basically do yield curve control, which she has. She put a cap on German debt, French debt, Dutch debt, Spanish debt, Italian debt, all of it, and manipulating the 210 spread internally, as well as versus U.S. debt. And you can see it. And she mostly works the German Bund, and then everything else falls in the line after that.
Well, they ran a zombie economy for many years. They did negative interest rate policy. I think that's what killed them for so long. They expanded their balance sheet. The European Central Bank's balance sheet on a percentage basis grew way faster than the Federal Reserve Bank balance sheet post 2008 through 2019. And the negative interest rate policy created tons of zombie companies. I don't know if you read my friend Daniel Lacaille's articles on Mises.com. He was writing about this in 2015, 2016, all the zombie economies that were surviving on cheap debt.
Yeah, no, absolutely. No. Daniel's work is excellent, and what I'm positing here is that you're making the point that Martin Armstrong has made over and over again, which is that negative interest rates destroyed the euro's a potential to replace the dollar as a reserve currency. So what did they do? I think they really did expect that they would always help maintain control over the Fed and over Congress, over the monetary and political control over the United States. I really do believe that the globalists behind this whole thing believe that they were going to be able to do that, and in the process destroy what's left of the United States. Because look, dude, I make this point all the time. Britain still wants their freaking colonies back. So does France. So does everybody else. Like if you watch the way they act, they still act as if they are colonial overlords. Look at the way France had to finally swallow the Niger coup and finally pull their troops out. Why? Because they couldn't get the United States to do their bidding for them anymore. Bitterly complaining about all of this stuff. Like, well, excuse me, like what? We're supposed to just pay for France's, we're supposed to pay for the defense of France's interest, where they're buying uranium and gold at literally less than 1% of the spot price. You want to talk about people who've been raping the planet and dude, seriously, Wall Street's got nothing over on the French and then the 14 countries that run with the CFA franc. We can do that conversation for another hour. Like, it's scary the way this is played. It's played out, and it's very obvious that there are forces within the United States who have looked into the abyss and said, we can't do this anymore. And previously, they never really had a voice on Capitol Hill that was credible. They got that voice, or at least they got that interregnum during the Trump administration. Even if Trump is a moron and was just running around doing the Trump thing while other things were happening in the background to set the stage for, if they did get rid of Trump, they would have set things in motion that would presage the return to some kind of normalcy at some point. And so you have the Trump interregnum, then you have the Biden junta. Okay, is the way I like to look at this. And then what are we going to have in 2024? I don't know, but I can tell you it's going to be the most bitterly contested election in the history of the United States. It's going to make 1860 look like an Amish barn raisin. It's going to be bad. And because the stakes now are existential for everybody at the top of the power structure that we have always lived under, and libertarians have always talked about in tangible terms. But the rules are changing because, like, Margaret Thatcher wasn't wrong when she said the problem with socialism is that you eventually run out of other people's money. She was absolutely right about that. And guess what? Even the banking oligarchs run out of other people's money, because at some point, when the system has been levered up to the point where it can no longer function, as Mises would put it, the crack up boom occurs, and then the fallout from that is that everybody starts acting in their own best interests. And when people start acting in their own best interests, and we're conditioned to believe it's all one big club and we ain't in it, because that's been the right heuristic for a long time. But you always have to continually, as Ayn Rand said, check your premises. And remember that it's never as simple as we think it is. And I would argue that, I've got data, I've got 2 years worth of error checking this thing. I've been back testing this idea for over 2 years now, and I'm like, and it keeps coming up a winner every time. And I can tell you what I think is going to happen next. Like, I can see it coming. I can see it coming.
So
Powell is at the point.
Do you think the best case scenario is stagflation then?
Mm-hmm. I think that is our best case scenario. I also think there's going to be a sovereign debt crisis in Europe. I think they staved it off for a couple more weeks with this with activating Hamas. I am half tempted to believe that Hamas was. I'm not sure who activated Hamas at this point, but I can tell you that by doing that thing this weekend or last weekend in that way has created look what it did. But here's the interesting part about it. We're doing this after the market closed on Friday afternoon. And in order for the U.S. 10-year to throw a 1-bar weekly reversal signal, meaning selling, closing below the low from the previous week, they failed. They didn't fail by much. They were trying to get it below 4.6%. They got it down to 4.63, but they couldn't close below it.
Well, the dollar index is rallying though. So if that keeps going up, I mean, that's going to be a global margin call on derivatives and dollar denominated debt outside the United States. So that could potentially cause deflation. And then once we get deflation, all it takes is one large hedge fund or one large bank, and then it's domino effect. Possible.
I think that the U.S. Banking system, I think the Fed has a lot more things ring fenced than people want to believe. I said at the beginning of this, and again, when I brought Daniel Booth on the podcast, we talked about it. I brought Caitlin Long on the podcast, and we went over the Fed's balance sheet. We talked about this hard. And, Caitlin grilled me on my own podcast for almost 2 hours. It was great. I enjoyed the shit out of it. Are you kidding? And what we came to the conclusion about is that, look, oh God, did I get lost in this? I do that every once in a while.
You're talking about the Fed's balance sheet?
Right. Well, the Fed, so what I mean is that, prompt me again. What was your point that I was trying to rip off of? I apologize.
Best case scenario, stagflation, and then we're talking about what can crash the system with a rally in the dollar. So you were talking about the 10-year U.S. Treasury yield spiking, but I've been warning about this, that every time the dollar is about to go on a super spike that Brent Johnson's been calling for, the Fed just panics and intervenes in the market. The Fed and the Treasury.
I don't see it as the Fed. I don't. the every time Powell comes out and says, no, I want a normalization of the yield curve, Yellen at Treasury panics. Okay, the BOJ panicked. Right, the yen is at 150. We know that that's going to be the BOJ's marginal line. They're not going to let the BOJ is trapped. They have to end yield curve control. They can't let the yen go below 150, or Mrs. Watanabe is going to start looking abroad for where to put her money. So this is why I'm bullish the Nikkei, but I'm bearish Japanese long yields on the Japanese government bonds. Right, the BOJ always has a massive dollar slush fund to interject into the market if they need to. The dollar is on a massive tear, and it's only just starting. It threw a 1 bar quarterly reversal, bullish reversal, closing above 105.88 at the end of Q3. What we're seeing now is an intervention by, I think, extraterritorial forces relative to the U.S. I think Powell wants a normalized yield curve. I think he's been abundantly clear he wants a normalized yield curve. He's not afraid of it. What the point I was trying to make, and I forgot, which is this, and I said to Danielle, again, error checking my arguments here. I put it in front of the people that I think would understand this point best. And I asked, simply put, I said, look, correct me if I'm wrong, but the Fed has $5 trillion worth of treasuries on their balance sheet, and they got $2.5 trillion worth of money at the time in the reverse repo facility. They have both liquidity to provide to the banking system, and they have collateral if the banking system needs that. They can provide either one to the U.S. banking system. Okay. Now, those numbers are updated today. It's now $1.1 trillion in the reverse repo facility. That's different. And that's signaling that we're running out of runway here. And maybe that's the number. When that gets below a certain level, that's when Powell is going to be finally say, okay, higher for longer is over. But oil prices are back over $90 a barrel. Inflation came in hotter than it was supposed to. They tried to engineer a rally in the euro this week, and then the CPI number came out, and the euro went from $1.63 and closed at $1.05 in 24 hours. Like, the euro is so weak, and Lagarde has to make a choice. She can defend credit spreads, or she can defend the euro, but she can't do both. And she's in the process of sacrificing the euro. I'm calling for the euro to go to 60 cents. But if the euro goes to 60 cents, then Germany's going to revolt. And what did I hear this morning? Christian Lindner over at the Free Democrats is looking to get out of the current coalition after the disastrous showing by the ruling coalition in Germany after Hessian and Bavarian state elections this week, the last weekend. These things are real, man. It's happening, and you got to watch all the little bits and pieces. You got to watch what's happening in every area, and you got to have mapped. In order to do that, you have to have mapped the freaking factions properly. Who are the players at the table? And the BOJ has its problems. The ECB is. I'm sorry, but the ECB is the weak man at the table, and the BOJ, I think, is the Fed's wingman, and that's why I think that. And I absolutely think that Ueda over at the BOJ is going to intervene hard, bring the yen down, and force Lagarde into a box that she is really uncomfortable with. Why do you think Yellen is trying to talk with China again today? She went to China over the summer and desperately got them to buy U.S. Treasuries in July. And they tried to bomb the market. That's what happened. And what did China ask for? What did China ask in return for that? Because they did do it. Because when the TIC report came out, Hong Kong had bought $18 billion or so net of new treasuries. Right? What did China ask in return? I'll tell you exactly what they asked for in return. No Ben Wallace as the general secretary of NATO, and no Ukraine, and no path to Ukraine becoming a member of NATO. That's what happened. Flat out. You saw it because the euro and the euro bond markets were blowing up on Friday. Yellen goes to Beijing on Sunday. The dollar takes a crapper the minute the Chinese markets open. It goes on for about a week. And the NATO summit's on Tuesday, and all of a sudden we were supposed to have World War III start because look, if the NATO summit had ended with NATO declaring that Ukraine would have an easier path for membership. Putin would have went ballistic, okay, and he would have escalated. And it's exactly what the Brits want him to do. They're desperate to try and get him to escalate beyond the point of no return. When they keep punching Putin in the mouth, blowing up the Kerch Street Bridge, blowing up Nord Stream, trying to breach red lines like giving cluster munitions and getting Ukraine into NATO, when either none of those things provoke the response from Putin that they wanted, they then have to go to the next big thing. And it was the United States who basically said no to the UK running NATO. Now, that's a big moment. Okay. And that intervention in the dollar that resulted from that week should have bombed the markets for 3 or 4 months. I was fully expecting to see the dollar hit a bear wave for about 3 or 4 months to get us through to the end of Q3. It didn't. It lasted 3 weeks. In 3 weeks, the dollar puts in another bullish reversal signal on the weekly chart, and we're off to the races, running into the end of Q3. I was shocked. When I saw that, I'm like, oh my God, this system is absolutely ready to collapse, and probably will start collapsing in Q4. And no one is happier about that than Jerome Powell. That is exactly what he's been trying to do. He now has optionality to do exactly what he wants to do. He can continue to raise rates slowly, like every other meeting, by 25 basis points in order to quote unquote tame inflation, or things start to break in the United States, he can cut rates. JP Morgan just came out today with great earnings, with, by the way, record net interest margin earnings, which is traditional banking earnings. Same thing with, I think, was it Goldman or Morgan Stanley? Guys, like traditional net interest margin banking at JP Morgan this quarter, best in years. What a shock.
Well, they have depositor funds. They have depositor funds that are leaving the regional banks, and the depositor funds are either going into retail investors, going into money market funds, or Treasury Direct, or to the too big to fail banks. So the JP Morgan doesn't have to pay 5% capital costs like a regional bank does.
No, I understand that, and I understand that, and I can tell you that my local credit union isn't giving me more than 0.15% on my passbook savings. I'm like, I'm not insensitive to the plight of what's going to happen to a lot of small commercial banks. And I do recommend to everybody, like, as opposed to pulling your money out of your local banks because you can get 25 basis points or 50 basis points in the CD from JP Morgan. No, leave it in your local credit union and let them figure out a way to repair their balance sheets. What I'm doing. But this move into money markets, this move into treasuries was, it was predictable. Of course it was. And there are a lot of regional banks that, were forced into the commercial real estate business during the zero bound era, but that's not Powell's fault. But what's Powell supposed to do? Like, go to them and say, get rid of your books because I'm going to raise interest rates.
It's too late for that. It's too late
exactly.
For that when 50% of their loan book for some of these regional banks is in small business loans and commercial real estate. Mm-hmm.
Of course. What I'm saying is the signs were all there that Powell was going to do this, but the markets didn't believe him, Jason. Okay. And they didn't believe him for over a year. Every time some little piece of information would come out that was relatively, bearish on the American economy, everybody was out there screaming, pivot, 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 pivot off the top of their heads. Like they were like they had Tourette's syndrome, for Christ's sake. It was crazy. And I kept sitting there going, are you out of your minds? Like, how hard do you need to talk your book here? But you'll notice that the people who were screaming the loudest about that were overseas. They weren't here in the United States. They were coming from the people who in the financial commentary who wanted to be right. And I got news for you, dude. I'm not Zerohedge's biggest. I'm not Zerohedge's favorite boy anymore. Like, they published one out of my last 5 articles because I dared to call them to task for purposefully misreading the friggin' tea leaves for their own book. And I know, I get it, and that's fine. I don't care, but I'm going to call it like I see it at every moment. I think Zerohedge does amazing work, but every once in a while they get a story wrong. I'm gonna tell them when they get it wrong. When they get it right, I'm going to tell them they get it right. I don't care. Like, I am only interested in following the story where I think it actually is, and because I don't, I, it's in a certain way. I come in with a bias against really terrible people, but my libertarian individualist instincts lead me as well to look at things strategically and then go, hey, if I'm looking at things with slightly rose-colored glasses here, it's because of the following. I want to see the Fed beat the ECB and the World Economic Forum and all these other people at their own freaking game, and the Bank of England and the British Crown and all the rest of them at their own freaking game, because I want to see the United States survive, because I'm an American and I believe that in that de jure we are still, the greatest country that has ever walked the face of the earth, i.e. via the Constitution. Do we follow the Constitution? Hell no. Are we going to ever get back to it? Probably not. But if that goes away, then these people win in a way that is philosophical and existential. We will have squandered a massive opportunity as humanity. Okay. And so this is where we are. And I think that, we have to be willing to be strategic in our thinking and accept the fact that the Fed and the Wall Street banks may be our allies for the next 5 or 6 years while they break everybody else.
What happens if Jerome Powell is not the Fed chairman? Because my interpretation of a lot of the people who work at the Fed is they're the opposite. They're the antithesis of Jerome Powell. There's a lot of Bernie Sanders, PhD economists there that say they hate capitalism, drive like a hybrid or an electric vehicle. They're making $200,000 and complaining about capitalism, and then yet they're trading stocks, and they're like the normal DC hypocrite bureaucrats.
I get it. And that insider trading scandal that I mentioned, what happened? 3 of the biggest hawks on the Federal Reserve Board, Kaplan, Kurita, and Rosengren, got axed. They nearly got Powell, but they didn't. And then they replaced them with a bunch of friggin' MMTers. Daniel DiMartino Booth is scared deathless that Powell's going to lose all of his allies. So if you're Davos, if you're the bad guys, what are you trying to do? You're trying to run the clock out on Powell. That's what you're trying to do. You get a
scandal. You offer him a bribe. You try to get him replaced.
No. You run the clock out by trying to piece together the European Union for as long as fucking possible. It's not that hard. Powell's not interested. If Powell wanted to be bribed, Powell would not have accepted the second term. Powell's worth $100 million. He could have gone back to private equity. He didn't have to take this job. I agree with this analysis. That guy could be a billionaire today. And he wasn't interested in that. And so now we're going to sit here, and that's the game we're playing. That's not fair analysis. Powell had the opportunity to walk away from all this stuff and let it go. And he didn't. He stuck it out, and he's doing the right thing. He's ending the Fed put. He's raising rates. He's pulling back on dollar liquidity. He's saying that it's time to end the dollar reserve standard because the world is ending. The world is de-dollarizing. If he doesn't do what he does now, the Fed's dead anyway. And if he does enough work between now and 2026, even those, MMTers and the people you described, even if they do take over, it'll be too late at that point. Because the ECB will be a smoking ruin at that point. There will be no place for the capital to go. And they will have no other option but to continue the process. And if the 2024 election goes well, which I give long odds of, okay, then we will have a different situation on Capitol Hill than we currently have. And even then, the situation on Capitol Hill today, we're doing this in the middle of a historic fight for Speaker of the House. And the fiscal conservatives seem to be winning here. Kevin McCarthy's gone. Steve Scalise's gone. We're likely to get Jim Jordan, who's far better than either of those other two idiots. We could get an impeachment of Joe Biden. We could see all sorts of things happen. We could see the return of Donald Trump. And then Trump will get the talking to about what's actually going on, and finally probably be let in on what the friggin' plan is, and to be like, oh no, yeah, we don't need to do zero bound rates. We can get through this. We're strong. We're Americans. We can fight. And he'll just pivot. He's Donald Trump. He doesn't have any memory. He doesn't have any morals. He doesn't have any scruples. But if he's told what the plan is and he agrees with the plan, then he'll do what's necessary. And I think that that's what's going on.
So last question here before I let you go. How do you think this is going to affect regular people with their savings, their small business? If interest rates stay high, the dollar is strong. I see a lot of small businesses failing, the cost of capital, credit markets, high interest debt. A lot of regular people who aren't making hundreds of thousands of dollars. They have high interest rate debt. They're struggling with stagflation and taxes. How do you think they protect themselves in this environment?
The way they protect themselves is if they're that over levered, they're probably screwed. Powell's going to hold rates between 5.5 and 6% until the middle of next year. Then he'll probably start cutting rates. He's going to hold on for as long as he can. He has to. The stakes are too high, Jason, and it's going to be hard for everybody. And I'm not saying that this doesn't come without pain. Okay, I'm not saying it's not going to be horrific. Okay, I wouldn't dare to dream to say that. Well, what I can say is the other option is oblivion. It's the whole thing collapses. And so it's going to be hard. And how do you protect yourself? If you have capital, take advantage of 5.5% rates. If you can, do it. But again, but the loss of confidence in the institutions that's what's putting a bid under the price of gold. The central banks are all buying gold like it's going out of style, because gold is coming back to the monetary system. We haven't even gotten into what I think the end of the plan is. Save that for the next time. If you want to do this again, I'll be happy to go into what I think is the means by which we get out of this. And it's one possible path. And I've spoken to a lot of people who are close to this scenario, to this situation. I've talked to some very powerful people as well, and they just kind of looked at me at one point and went, "How did you figure this out on your own?" I'm like, because I can read, and I can do strategic thinking. And they're like, "Well, bravo, because you got it right." I'm like, cool. So, I think it's going to be bad. Like, I don't have any easy answers for people.
Oh, the current system is a disaster. It's made things worse with the bailouts. It's totally for the regular small business owner, the regular person. It's destroyed the middle class. It's destroyed a lot of small businesses with these interest rates at these levels. I mean, there's going to be a lot of bankruptcies.
No. What destroyed the middle class was interest rates at the zero bound for 15 years. That's what destroyed the middle class. What destroyed the middle class was no risk, the bad pricing of risk. And people going into things and buying things that they should have never bought. It was a bullshit rally in asset valuations. And I'm sorry, but that's the reality. And those of us who didn't follow that path got screwed for 15 years. I'm one of those people. I'm one of those people who got screwed by zero bound rates because I did it right. I built my own house. I worked my ass off to only hold an $80,000 mortgage. I paid it off, and I got screwed. No savings for 15 years, and worried to death that the whole friggin' system was going to collapse any day now. Like, I got screwed. Everybody in that gold went nowhere, and they just left everything up to the tits. Everybody else's house went through the freaking roof, and they flipped their houses, and they bought $75,000 cars they couldn't afford, and all the rest of it. And now I'm like, at a certain level, this is what it is. We're going to have asset prices are going to fall. But if there's a sovereign debt crisis in Europe, the capital that's in Europe is going to flee into the United States, and that's going to buffer some of the bad. It's going to buffer some of the bad for about 18 to 24 months. And then when the dollar gets too expensive, it's going to all rush right back out again because there's going to be too many good opportunities overseas. So if you understand that dynamic, that the strong dollar is going to work to your advantage in the short term, and then you play the falling dollar later, you can do very, very well. If you are in debt, get out of debt. If you cannot get out of debt, I'm sorry, then stop paying on it. Like, what are you going to do?
I think it's like has to do whether or not you locked in the 3% mortgage many years ago, because those people right now, they don't want to sell their house.
No, they don't. And why should that? Why should you sell your 2% car loan or your 3% mortgage? Why should you do that? You should stay exactly where you are, hold it, don't worry about it, unless somebody, guess what, wait for housing prices to recover. The Fed's going to pivot, Jason. They're going to pivot on their time. Like when the Fed starts to lower rates, which they will, and they'll probably go from 5. I think they're going to go to 6, and then they're going to start cutting, and they're going to cut from 6 back to 4.5. That's what I think they're going to do. And I think the silver futures curve is as of right now is not as mispriced as it was. And I think the term is, I think it's asking for a pivot in June of next year. I think it's probably going to be closer to September or December if things don't deteriorate, especially if things break down in Europe. Okay, then Powell will have the opportunity to continue to keep rates higher for longer. And if they are somehow able to keep Europe together for any length of time, well, then he's going to have to raise above 6%. Like that's the fulcrum. So I think he's going to try and hold on till July or August of next year. Maybe by Jackson Hole of next year, he'll start talking about cutting rates. He'll start signaling that he'll start cutting rates at the end of Q1, which will buffer the markets, and then we'll see what happens. And again, but if Europe breaks, he's going to be very happy to sell Christine Lagarde dollars at 5.5 to 6%. He's already been doing it for the last year. Happily.
I mean, the Fed, from what I was told by an insider here in DC, that the Fed doesn't count, like there's over 3 trillion in currency swap lines out to the European Central Bank, and they're not paying most of it back. So, but this has been going on since 2008. My argument is that the European Union, basically with their large European banks, collapsed in 2008, and they've been surviving on currency swap line loans that have been getting bailouts, and then the loans are waived every couple of years since.
Yeah, and that may be true, and I'm not arguing that it's not true, but at some point, like everything else, like those loans may never be paid back, but no more of them are happening. Like that is not what's going on now, because everybody's screaming, and that's okay. It's time. It's time to flush the system of the bad capital. It's time to flush the system of the bad debt. It's time. It's time to start rebuilding the pool of real savings. That's simple.
Well, I wish we'd get rid of the fiat currencies, because the current system has just created so much waste, fraud, corruption, and abuse.
Sure, I'd love to see that too, but I'm not going to see it in my lifetime. I'm not.
Yeah, I agree.
But we'll see. But we'll see a 20-year transition to something better. Gold is coming back to the monetary system. It's very clear and it's very obvious that it is. I don't know. I think I'll see that. I think that'll happen within the next 5 to 7 years.
I also think there's been an underinvestment in a lot of different commodities, but just buying and holding these things for many years is dangerous. So you have to be strategic about it.
I agree. Absolutely.
Well, Tom, I enjoyed our discussion. I have seen you talk about oil stocks and oil market. We didn't get a chance. So we did the top-down geopolitical, and I let you talk about your views. Thank you very much for your time, and we'll have you back on then in a couple months for an update.
Sounds good, Jason. Thank you. Have a good day now.